Now, New Zealand has been the worst performing market in Asia in the first half. It's gained just over 2%, underperforming markets such as Australia and Japan. Still, there are some investors who are still optimistic about the recovery in New Zealand. And Tracy Withers joins us on the line from Wellington, New Zealand. Tracy, there are signs of confidence returning, correct?
Yes, Jacinda, there are signs at both the consumer and business level. We had a report last week from Westpac that said consumer confidence in the second quarter was the strongest since the final quarter of 2007. And then just this week we've had a second report on business confidence in June that again had companies saying they were more optimistic about their sales and their profits. And apart from 1 month in September last year, that reading in June was the highest since December 2007. So certainly the signs are there that that the economy may start recovering by the end of the year, and that may lift the stock market.
How much of a boost is that likely to give the stock market if, like you said, it's likely to have a trickle-down effect? Any sense from investors?
We had a survey this morning from Russell Investments who've been talking to local investment managers, and in the second quarter their survey showed that all the investment managers they spoke to, these are local managers, were optimistic about the market compared to the previous survey at the end of the first quarter when they were all very either neutral or expecting more decline. So there's certainly been a turnaround in how local managers are seeing both local stocks and companies that sell into the global market, because of course exports make up a big part of the economy, and with some signs of recovery globally, that will boost the local exporters that are listed in New Zealand.
Tracy, is the government expected to do anything, implement measures to reassure investors?
The government in its budget in May outlined a few steps to keep the economy growing and to create jobs. Because of the size of their fiscal deficit and the risk of a credit rating downgrade, they had to delay planned income tax cuts that were scheduled for early 2010. But that hasn't really dented consumer optimism. I think a lot of people expected the government to make those moves to make sure the deficit didn't blow out and debt didn't get out of hand. And the government's line since then has been to maintain optimism in the economy and to try and encourage companies not to fire workers, and if they can, to hire workers.
Bloomberg's Tracy Withers in Wellington, thank you so much for that.